You're watching Masters in Trading Live with Jonathan Rose.
We got a really cool show planned for you today, guys. I got 3 topics that I'm going to discuss. We're going to discuss the metals: gold, silver, gold ripping higher. We're going to talk about gold, silver. We're going to talk a little bit about platinum, a little bit about copper. The second topic, I'm going to share with you some free tools that you can find on the internet that I use all the time. They are 100% free. I use them all the time. I'm going to walk you through how I use them, and stay to the end, because yesterday in our Discord community, we had a pop quiz. We're going to go over the pop quiz. I'll show you the answers, and I'll show you exactly how we got to those answers. So welcome, everybody. I got the chat open. Make sure you're subscribed. I was joking that I couldn't even start today unless everybody was subscribed. So please subscribe, give it a like, and even share it with your friends. Let's go over the slide deck. Let's have some fun. I got the questions open. If you guys have any questions while I'm presenting, please just throw them in the chat. Okay, really excited about today's presentation. Not sure why. Let me just find Mr. Penn here. All right, here we go. All right, first, yesterday, got a lot of great feedback about yesterday's video, guys. Thank you, thank you, thank you. Yesterday, I did a presentation on the yield curve. This is what the thumbnail looks like, and we walked you through the shape of the yield curve going for the last 20 years. So Ernie, thank you so much. Every day I listen to you, I find myself understanding more and more about how you think about things. Thank you for being so transparent and teaching all of us. And Roger, that's where being in the community is a really, really big help, guys. Trade in a community, investorplace.com/challenge 2025. Get your buns in the challenge too. Okay. Hopefully, if you've been watching me, you've seen this chart before. If you haven't seen this chart before, it's pretty straightforward. This is gold, and this is silver. And this is them going back until October 2022. Now, these are futures, but it doesn't matter. Don't get scared of futures. Don't get scared of options. They're just a derivative of one another. Gold futures is just a derivative of gold. It's the same thing. Silver futures are just a derivative of silver. But what we know is that gold and silver move together. Once in a while, they'll break apart, as they've been doing. This is actually the most they've been breaking apart really in the history of their relationship. But overall, they are moving together. So where gold goes, what do we know? Silver is going to follow. So what we want to do is we look for divergences. And a divergence is when gold and silver are trading together their whole entire existence, and then that relationship breaks apart. So right here, in the beginning of October and 25th, we were bullish hard assets. Heck yeah, but we weren't bullish gold. You're going to get way, way better bang for your buck at this point being bullish silver, because as gold goes higher, silver catches up. Here's another chart. I'm going to come back to that chart. Here's the other chart, and this chart is gold minus silver. Now, if I just do 2 charts, you can see we put gold next to silver, fine. But gold minus silver is going to be one line the entire time. So it trades all the way up, and right here, as gold trades lower, silver trades higher. So right here, that's the benefit that you're getting. Right here, rallied straight up, gold super strong relative to silver. I got some questions coming up. Can you elaborate how to bring that up on your computer? This is there's no elaboration. This is just gold, silver, gold against silver. Richard, whatever happened to BTCS versus Hi everyone. Are we okay? Can I get a Y in the chat? Let me get a Y in the chat if we're okay, guys. We'll edit these videos and make them look a little bit nicer. Talk to me. Yes, 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 yes. If I remember correctly, I was presenting on gold and getting asked random questions on other topics. Welcome, welcome, welcome. Yes, I am connected to the internet, and once in a while that internet goes down. It happens. It's frustrating, but we all got to be strong, guys. We're in this together. So yes, the internet went down while I was presenting. Hopefully we'll edit these videos a little bit so they sound good moving forward. I told you about yesterday's presentation. A lot of great information about the yield curve. A lot of people had questions about the yield curve. Hopefully, you guys went and watched that video and learned. The yield curve drives the market. There's nothing more important than the shape of the yield curve. That's why we spent yesterday's time and went all about that topic. The next topic, gold versus silver. I've been trading since 1997. 100% of the trades that I've done throughout my career have been divergence trades, have been pair trades. Some people call them delta neutral trading. That's exactly why I'm sharing with you guys these trades. Going into 2025, gold was the most expensive it has ever been relative to silver. If you go back and watch those videos, we are screaming from the rooftops, get long silver, get long silver, get long silver. Don't get long gold at those levels. Silver has now caught up. It's very, very important to look at things in terms of a divergence. Where do these charts come from? Everybody in our all access community has access to all of our charts. If you have any questions about our charts, we have a specific Discord room called Toss Tools and Questions. All those questions, please put in those rooms. Okay, again, everybody in our all access gets access to all of my charts. Okay, here's another one, and this is crazy. What I love about this is, again, a relative relationship between two highly correlated commodities, copper What is that? Long John Silver. Oh my goodness. So we have copper and we have silver. Getting thrown off today, guys. All these frickin' random questions. Actually, you know what I'm going to do? I'm going to take this chat down because it's bugging the hell out of me. That's what we're going to do. Copper and silver. When these break apart, there is opportunity. What do we have here? Tariffs. I'm a big believer in the free market system. What happens here is this is natural supply and demand, and this is tariffs. So tariffs are making this artificial right now. Copper is way, way too cheap. relative to platinum. To celebrate that, Danger Cat yesterday hasn't been too active, but was just able to take off her copper position for a nice 175%. So very, very well done, Danger Cat. And thank you so much for sharing. Gold, silver. All right. Let's go here because I want to talk about some really, really incredible tools that you can get from the CME. So what I've done is I have a video, and this video is about a 13-minute video where you can watch and you can learn all about the CVOL tools. Chris Water. Chris Water, can you share that video, please, in the chat? And here's what it looks like. Okay. What is this? This is skew. Do we know what skew means, guys? Skew is how your calls are priced relative to your puts, or how your puts are priced relative to your calls. So this is gold and silver. This is when gold really, really started breaking out relative to silver. And you can see it on these tools, but right away, when it started to weaken up and gold and silver started rolling over, that's when the skews came back together. So we always say the creative trader wins. This is being creative, but you need to learn how to use these tools, and you can learn how to use these tools in this CME Group CVOL Index video. One second. I am trying to find my questions again. Telvin, I can't find the questions. Okay. Here's a little quiz we put up in our room yesterday. Advanced Notice Alert, HLF. Major options activity flagged in Herbalife. This is not a trade idea, just a pop quiz. So what I wanted to ask, is this trade bullish? Is this trade bearish? And the trade that we were talking about in our pop quiz yesterday was Herbalife. Now let me show you this exact trade in Herbalife. So the trade that we saw yesterday in Herbalife was these 20,000 contracts. These 20,000 contracts were bought 17 and a half calls. So that's what this trade was right here. Okay? If we look under the hood to see exactly what this trade was, Herbalife, volume, 20,000. This delta's wrong. 17 and a half calls at 20,000. And then again, $17 and a half calls, 2027. Right here, boom. Now, in order to tell whether this was bullish or whether this was bearish, we're always going to look at the time in sales. The time in sales for this trade, 9:21 Central Time, 10:21 Eastern Time, 9:21 Central Time. So then what do? Then we always go to the 1 minute chart because you want to see exactly what that order did. That order was done at 9:21, which would be right here. After 9:21, you see Herbalife went from 980 to 1005, right? It went straight up. The reason it went straight up is because the market makers are buying calls. Excuse me. This is a customer. The customer is buying calls, and the market maker is selling calls. And in order to hedge those call sales, the market makers are forced to buy stock. So without a doubt, 100%, this order was absolutely freaking bullish. And it's bullish going all the way out to those 17.5 strike out in January. Right here. Boom, 17.5. So somebody's making a really, really big bet for the next 498 days that Herbalife would trade higher. In our Discord community, after seeing a bunch of the answers come in from everybody who participated, a big shout out to Randall. Randall absolutely nailed it. This is the answer that I was looking for. Looks like the trade itself was a buy. It was done at the ask. The 1 minute chart shows a big spike, which I suppose is a market maker hedging the sale to the buyer. So I think the big buyer seems to be betting bullish. Not only is this the right answer, there is no wasted breath. There's no bullshit added trying to make it sound more sophisticated or whatever. It's simple. It's straight to the point. And that's the answers we're looking for. Randall, great job. Thank you for sharing. I'm going to hop off right now, guys. What we're going to do is, in our all access, got a great question from Dave here. Could someone kindly direct me to a video that discusses volatility and the expected move? Well, I'm going to do that right now. I'm going to discuss volatility and the expected move with everybody who's in all access. If you're not part of the Discord community, hop in, guys. The water is great. investorplace.com/challenge 2025. Again, sorry I had to take the questions out. Kind of bothering me a little bit going off and on and questions that weren't about the topic. So that's why I had to take a break from that. I'll see you guys live tomorrow, 11 a.m. Eastern time. Everybody in all access, you guys sit tight. We'll be right back.